Did you know that over 35% of Canadian seniors are unknowingly breaking the law by living their everyday lives? From missing out on benefits to signing documents that no longer hold legal weight, the legal landscape in 2025 is changing fast, and many older Canadians are getting left behind. What's worse? Some of these changes could cost you thousands of dollars, delay your health care, or even put your home at risk without you ever realizing it. Sounds alarming? But don't worry, we've got you covered. In this video, we'll uncover 10 Canadian laws every senior must know in 2025 laws that could protect your money, your rights, and your future. Whether you're managing your estate, planning long-term care, or just trying to enjoy retirement stress-free, you need to hear this. Stick around because law number 7 might just save your life savings. Number 10. Senior tax credits and benefits. What's new in 2025? Let's talk about money, because in 2025, you could be leaving thousands of dollars on the table if you're not aware of the latest tax credit changes designed specifically for Canadian seniors. Every year, the federal and provincial governments adjust their benefits and credits. But this year, a few critical changes could make a real difference in your wallet. First up, the Home Accessibility Tax Credit (HATC) has been expanded. That means if you're planning to renovate your home to make it more senior-friendly, like installing grab bars, stair lifts, or walk-in bathtubs, you can now claim up to $20,000 in eligible expenses. That's a potential $3,000 back in your pocket just for making your home safer. Another big update, there's a brand new Canada Caregiver Credit expansion. If you're caring for a spouse or a dependent adult with a serious medical condition, the amount you can claim has increased in 2025. This also includes expenses like home, nurses, or specialized transport services. Not enough people know about this, and it can add hundreds, sometimes thousands, to your refund. Also worth noting, digital tax filing is now the default. Paper filing still exists, but it's slower. The Canada Revenue Agency is encouraging seniors to use free online tax clinics, some of which are now available over the phone or in person at libraries and community centers. It's easy, safe, and often helps catch missed credits. But here's the catch. These credits aren't automatic. You have to know what to claim and keep your receipts. That new medical chair or the extra room you built for your caregiver? If it's not recorded properly, it won't count. So have you claimed everything you're entitled to? Or are you unknowingly giving the government more than you should? Don't let confusion cost you. If this helped you, hit that like button. Subscribe for more practical legal tips for seniors, and drop a comment if you've ever missed a credit you later discovered. Someone else might learn from your story. Number 9. Rent control and housing rights for seniors in 2025. One of the biggest concerns for seniors across Canada isn't healthcare or pensions, it's affordable housing. With the cost of living rising steadily and vacancy rates at record lows in many cities, rent control laws and tenant protections have become a critical lifeline for older Canadians living on fixed incomes. The good news? Several provinces have introduced new rules aimed at protecting seniors from unfair rent increases and evictions. But if you don't know your rights, you could still be at risk. In Ontario, for example, rent increases for most units are now capped at 2.5%, but only if your unit falls under rent control. If you moved into a newly built apartment after 2018, it might not be covered. In British Columbia, landlords must now provide greater notice and justification for any eviction, especially when re-evictions are involved, where tenants are evicted under the pretense of repairs. Seniors are disproportionately targeted, and many don't know they can legally challenge these evictions through the provincial tenancy boards. In Quebec and Nova Scotia, new laws require landlords to offer relocation assistance or compensation for seniors being displaced due to building redevelopment. And in Alberta, although rent control doesn't exist province-wide, seniors in government-assisted housing are now protected by stricter annual rent increase limits and have the right to request rent reviews based on income. What's more, if you're living in subsidized housing such as co-ops or nonprofit residences, Your rent is usually geared to income often no more than 30% of your gross monthly income. But these agreements need to be renewed annually. And missing documentation can result in rent hikes or even eviction. It's also important to keep written records of all communication with landlords and to know that legal aid services for housing disputes are available at little to no cost for low income seniors in many regions. In 2025, knowing your rights as a tenant is more than just helpful, it's absolutely essential for keeping a roof over your head. Number 8. Travel and health insurance requirements for many Canadian seniors. Retirement means finally having the time to travel, whether it's a sunny vacation down south, visiting grandchildren across the country, or even spending months as a snowbird in the US. But in 2025, the rules around travel and health insurance have tightened, and failing to comply could leave you with massive out-pocket medical bills, or even denied coverage during an emergency. First and foremost, provincial health coverage doesn't follow you abroad. Most provinces, like Ontario and Alberta, now offer only minimal reimbursements for out-of-country medical care, if it's just a fraction of what treatment costs in the US, for example. A hospital stay in Florida could run over $10,000 per day, and without proper private insurance, you'll be expected to pay it in full. What's changed in 2025 is the requirement for proof of sufficient travel health insurance when entering certain countries. Places like Cuba, some European nations, and even parts of the US are asking seniors to show documented coverage that meets minimum policy standards. Failing to provide this could result in denied entry or extra fees at the border. There are also new integration policies between private insurers and government programs. For example, if you're covered under a provincial drug benefit plan, you may be required to inform your insurer in advance to ensure prescriptions are covered while you're abroad. Some companies are also refusing claims if the insured did not disclose pre-existing medical conditions, a common misunderstanding that has led to many rejected claims in recent years. In addition, multi-trip annual policies are now regulated differently. Seniors over 70 must often complete medical questionnaires or screenings before being approved, and some policies may require a waiting period after a major health event, like surgery or a new diagnosis. To travel safely and confidently in 2025, seniors must now take extra care to review their policies, understand the fine print, and plan ahead. The days of booking a trip and assuming you're covered are over. Travel smart or risk serious financial consequences. Number 7. Anti-scam laws and cybersecurity protections for senior scammers are getting smarter and, unfortunately, seniors remain one of their top targets. In 2024 alone, Canadian seniors lost over $90 million to phone, email, and online fraud. That's why in 2025, the federal government has introduced stronger anti-scam laws and digital protection measures aimed specifically at protecting vulnerable populations, especially older adults, under the Digital Charter Implementation Act. New provisions now require banks, telecom companies, and online platforms to implement real-time fraud alerts, stronger identity verification systems, and mandatory reporting of suspicious activity, especially when it involves seniors. For example, if someone tries to transfer a large sum of money from your account or open a new credit card in your name, your bank is now legally required to notify you and delay the transaction till it's verified. One of the biggest changes is the creation of the Senior Cyber Fraud Watch List, a secure database where verified scam reports are tracked and shared across law enforcement, financial institutions, and cybersecurity agencies. Seniors can now voluntarily sign up to receive real-time scam alerts via email, phone, or text, keeping you informed about active threats in your area or online. There's also a nationwide rollout of government-funded digital literacy programs for seniors. These programs teach how to identify fake emails, recognize phishing attempts, use strong passwords, and navigate online banking safely. Libraries, senior centers, and even some pharmacies are offering free workshops, no computer experience needed. Furthermore, Caregivers and family members can now apply for monitoring access to help older relatives manage their digital accounts and report suspicious activity. This added layer of oversight has already helped prevent thousands of cases of identity theft and financial fraud. In 2025, protecting yourself online isn't just smart, it's supported by law. With tougher regulations and better tools, Canadian seniors now have more power than ever to fight back against scams and protect their digital lives. Number 6. Long-Term Care Act Amendments. Care has been one of the most scrutinized sectors in Canada over the past few years, especially following the devastating impact of COVID-19 in care homes. In response, major amendments to the Long-Term Care Act have been implemented in 2025, aiming to improve conditions, accountability, and the rights of residents, particularly seniors. One of the most significant changes is the mandatory staff-to-resident ratio. Facilities must now meet new minimum staffing levels for nurses and personal support workers. With the goal of ensuring more hands-on care per resident, this means more consistent assistance with daily activities, medication management, and overall well-being. For the first time, provinces like Ontario and British Columbia are legally enforcing these ratios with hefty penalties for non-dash compliance. Another major reform is the introduction of the Seniors' Bill of Rights, now prominently posted in every licensed care facility. This document outlines your right to dignity, privacy, cultural respect, and informed decision-making regarding your treatment and care. If a resident feels their rights are being violated, whether through neglect, improper food quality, or being denied social interaction, they now have legal grounds to file complaints or take action. Inspections and transparency have also improved. Long-term care homes are now required to publicly post their inspection results and incident reports, which include any fines, safety breaches, or complaints filed by residents and families. This information is available online, helping families make more informed decisions when choosing a facility. In addition, there's now greater emphasis on personalized care plans, which must be developed with input from both the resident and their family. These plans cover medical care, dietary needs, religious or cultural preferences, and mental health support, ensuring a more holistic approach to senior care. With these 2025 amendments, the government is taking meaningful steps to restore trust and quality in long-term care. Seniors and their families now have clearer rights, stronger protections, and better tools to hold facilities accountable for the care they provide. Number 5. Power of Attorney (POA) rights and new provincial regulations in 2025. Power of Attorney (POA) laws have undergone significant updates across several Canadian provinces, aimed at improving transparency, reducing elder abuse, and making sure seniors maintain control over their lives even when someone else is helping manage their affairs. A power of attorney is a legal document that gives someone the authority to act on your behalf for financial or personal care decisions. But if misunderstood or misused, it can lead to serious consequences. One of the biggest changes is the introduction of mandatory disclosure requirements. In provinces like Ontario, Alberta, and Nova Scotia, individuals appointed as an attorney under a POA must now provide regular updates, often annual, to either the senior, a designated family member, or a legal oversight body. This includes summaries of financial transactions, medical decisions, and any changes in living arrangements. The goal is to create a paper trail that deters financial misuse and increases accountability. There are also new limits on appointing multiple attorneys, while having more than one person share responsibilities can be a safety net. New regulations warn against confusion and conflict. Provinces are now urging seniors to clearly define roles and decision-making processes in the POA documents. For example, if two people are appointed, must they agree on every decision? Or can one act independently? In 2025, these answers must be spelled out clearly to avoid legal disputes down the line. In addition, many provinces have introduced online POA registration systems to prevent forgery and ensure documents are accessible to healthcare providers and financial institutions when urgently needed. This is especially helpful in emergencies such as hospital visits. where rapid access to a verified POA can impact critical care decisions. These reforms make it easier and safer for seniors to delegate authority without losing control. If you already have a POA in place, 2025 is the perfect time to review and update it according to your province's new rules. It's not just a formality, it's a safeguard for your rights, your finances, and your future peace of mind. Number 4. MAID Medical Assistance in Dying Legislation, Expansion 1. Of the most emotionally complex and legally sensitive topics in Canada today is medical assistance in dying MAID. In 2025, the legislation surrounding MAID has expanded significantly. And it's crucial for seniors to understand what these changes mean not just for themselves, but for their loved ones in long-term care planning. The most notable update is the inclusion of individuals suffering solely from mental illness as eligible for MAID. Following a delayed rollout that was originally proposed years earlier, this means that seniors living with severe treatment psychiatric conditions may now qualify under the new criteria, but the process is more cautious and tightly regulated. There are now mandatory psychiatric assessments, longer waiting periods, and stricter safeguards to ensure decisions are informed, voluntary, and not influenced by temporary distress or outside pressure. Another key development is the strengthening of advance requests. Seniors diagnosed with conditions like Alzheimer's or other dementias can now make a written request for MAID while they still have full mental capacity, to be carried out later if they meet the criteria and can no longer communicate. This provision empowers individuals to make decisions about their end-of-life care before cognitive decline sets in, offering peace of mind to those who fear a future without autonomy. However, this area of law is still evolving, and differences remain between provinces in how MAID is accessed and approved. Some regions have added local review panels or additional layers of consent to protect vulnerable populations. Others are expanding community-based MAID services, allowing qualified patients to receive assistance in their homes or long-term care facilities rather than hospitals. MAID remains a deeply personal choice, and in 2025 it is more accessible, but also more carefully regulated. Understanding these updates is vital for anyone considering end-of-life planning, especially as the law continues to walk the line between compassion, autonomy, and protection. Number 3. Digital wills and estate law reform. Estate planning has taken a major leap into the digital age. And in 2025, Canada's laws around wills and estates have evolved to reflect how people live in a more connected world. One of the most significant reforms is the legal recognition of digital wills in several provinces, including Ontario, British Columbia, and Alberta. This means seniors can now legally draft, sign, and store their will online without ever putting pen to paper. But this convenience comes with new responsibilities. For a digital will to be valid, it must meet strict criteria. It must be signed electronically, witnessed virtually by two people also signing digitally, and stored in a secure, tamper-proof digital platform approved by the province. Not all platforms qualify, and simply saving a Word document on your computer won't hold up in court. Another change is the rise of automated estate planning tools, many of which are now regulated to ensure they meet legal standards. These tools guide seniors step by step through drafting wills, naming executors, assigning powers of attorney, and even planning digital asset transfers such as social media accounts, online banking, and cloud-stored photos or documents. In 2025, these digital assets are now formally recognized in estate law, which means they can be included in wills and passed on to beneficiaries. Importantly, the laws now allow for easy updates to digital wills, making it less likely that outdated or forgotten documents will cause confusion after someone passes away. However, with the ease of editing comes the risk of fraud. So provinces have tightened identity verification protocols and require detailed logs of changes made to digital estate documents. These reforms are designed to give seniors more flexibility and control, especially if mobility or health issues make traditional estate planning difficult. But they also highlight the importance of getting it right, because an improperly created digital will can still be challenged or deemed invalid. In a world where everything is moving online, Planning for the end of life is no exception, and in 2025, digital wills have officially become part of the new normal. Number 2. Old Age Security, OAS clawback threshold for many Canadian seniors. Old Age Security, OAS, is a key part of retirement income. But what most people don't realize is that this benefit isn't guaranteed in full. In 2025, the OAS clawback threshold, officially called the OAS recovery tax, has once again been adjusted. And misunderstanding this rule can quietly cost seniors thousands of dollars each year. Here's how it works. If your annual net income exceeds a certain limit, the government starts to claw back your OAS payments. For 2025, that threshold is now $90,997, which means that for every dollar you earn above this amount, 15 cents is deducted from your OAS benefits. If your income is high enough, your entire OAS payment could be wiped out. What makes this more concerning is that many seniors cross the inch threshold without realizing it. Income from investments, RIF, withdrawals, rental properties, or even capital gains from selling a home or cottage can push someone over the limit. And because the clawback is based on your previous year's income, you might only feel the impact when it's too late to adjust. To make matters more complex, some provincial benefits are tied to federal income thresholds. That means exceeding the OAS clawback limit could also affect eligibility for other programs, like drug benefits or property tax credits in 2025. New guidelines recommend that seniors engage in income-splitting strategies with spouses, stagger RIF withdrawals, or consider tax-efficient investments to stay below the limit. Financial advisors now commonly include OAS optimization as part of standard retirement planning. The government has also updated the My Service Canada account system, allowing seniors to view real-time projections of their OAS clawback based on income estimates, something that wasn't easily available in previous years. Understanding the OAS clawback isn't just about taxes. It's about protecting your retirement income. In 2025, being even slightly over the line can cost far more than most seniors expect. Number 1. The Canada Pension Plan, CPP, changes minus 2025 updates. Canada Pension Plan, CPP, is one of the most important financial pillars for Canadian retirees, but in 2025, some major updates have changed how much you pay, how much you receive, and how long you might want to wait before applying. Whether you're already collecting CPP or still planning your retirement, these changes could have a significant impact on your income. Starting this year, the CPP Enhancement Program has entered its next phase. The maximum annual pensionable earnings limit has increased to $73,200, up from $66,600 in 2024. This means higher earners will now contribute more, but also become eligible for increased benefits when they retire. A new second earnings ceiling has also been introduced, allowing for additional contributions on income between the first and second threshold. While this could feel like a higher deduction from your paycheck, it's designed to boost long-term retirement income, especially for those who worked full-time for most of their careers. For seniors still working past age 60, it's important to note that CPP contributions are now optional between ages 65 and PTOs. If you choose to continue contributing while receiving CPP, your pension can increase slightly each year through post-retirement benefits, PRBs. However, many seniors are unaware they need to actively opt out of contributions once they turn 65 otherwise. They're automatically deducted, even if not needed. Another key update in 2025 is the improved online CPP calculator offered by Service Canada. It now includes personalized projections based on your past earnings, planned retirement age, and potential future income, helping you choose the best time to apply. Remember, taking CPP early at 60 reduces your monthly benefit, while delaying until age 70 increases it by up to 42%. With retirement timelines shifting and life expectancy increasing, the 2025 CPP updates are meant to make the system more flexible and sustainable, but only if seniors understand how to use them to their advantage. Now that you Know the 10 Canadian laws every senior must understand in 2025. Which one surprised you the most? Staying informed isn't just smart, it's essential for protecting your rights, your finances, and your future. If you found this video helpful, give it a thumbs up. Subscribe for more practical tips tailored for Canadian seniors, and share your thoughts in the comments below. You never know, your question or experience could help someone else. And don't miss our next video on senior benefits. Most Canadians are still missing out. One in 2025, linked right here on the screen.